Good morning. You're watching All You Need to Know on BloombergQuint Live, and I'm Alex Matthew. Happy Monday to you. It's the last one of 2019. Let's take you through the headlines this morning. No improvement in India's macroeconomic condition may result in asset quality worsening for banks by September of next year, according to the RBI's Financial Stability Report. Power Minister R.K. Singh says high transmission and distribution losses led to Discoms posting losses of 27,000 crore rupees in FY19. Lenders to Dewan Housing Finance will attend a meeting for the first time convened by the RBI-appointed administrator after the company was admitted under insolvency proceedings. India's coal imports have risen 4% in the April to November period. On a year-on-year basis, though, imports fell 0.8% in November. And opposition leaders put up a show of strength as Hemant Soren is sworn in as the Chief Minister of Jharkhand for the second time. Let's talk about the US markets now. They ended mixed during Friday's trading session, but despite that, benchmark indices are set to post their best annual performance since 2013. The Nasdaq composite snapped an 11-day gaining streak but remained above the 9,000 mark. The S&P 500 posted its fifth straight weekly advance, while it was the third such week for the Dow Jones. There is also a possibility that the benchmark indices could register their best annual returns since 1997, with 2 trading sessions left. For the year so far, the S&P 500 is up 30%, the Dow is up 23%, while the Nasdaq has gained as much as 35%. Let's take a look at the Asian markets now. I'm joined by Sophie Kamruddin, who's joining us from the Bloomberg studios in Hong Kong. Morning, Sophie. How are we looking at the start of the week?
Well, good morning. This Monday, we are seeing Asian stocks drift lower towards the year end, trading around June 2018 levels then, with the regional benchmark set to snap a 2-day gain. And among the laggards today, we do have the Nikkei 225 under pressure, off 0.5%, while we do have the yen gaining some ground, trading at 109.36 against the dollar, which is on the retreat, set for a yearly loss. And so we're seeing a pickup in other regional currencies as well. The Taiwanese dollar inching again towards that 30 level against the greenback, while the Kiwi and Aussie dollars are trading at 5-month high, and the Korean won back below 1160, stronger than one of the better performers in Asia in December, with fundamentals and technical indicators pointing to more gains for the Korean won going into 2020. But we are seeing weakness for equities, the Kospi off by 0.1%. This as chip makers are dragging on the benchmark, and we do have the Hang Seng also losing ground, off 0.1%. This has weighed on trade figures, which may show more weakness for the economy, which the Finance Secretary Paul Chan on Sunday warned could see further contraction in the fourth quarter. Now, on the mainland, we are seeing losses for the CSI 300, off 0.4%. This as we also assess the potential reaction to China making its latest step towards reforming its interest rates regime, ordering all banks to switch the existing loans to the new loan prime rate, which is about 20 basis points lower than the old benchmark. Back to you.
Thanks so much for that, Sophie. All right, let's take you through some international news now. Bushfires in Australia are set to worsen in the coming year. Over 30,000 people have been asked to evacuate from sensitive zones or areas as smoke engulfs a major part of southeastern Australia. Ed Johnson of Bloomberg News has more.
We've got the smoke haze outside in Sydney. That's from about 100 fires burning across New South Wales state. A couple of stats for you. There's a fire about 90 kilometres out to the northwest of Sydney called the Gospers Mountain Fire. That's been burning for weeks and weeks, and it's destroyed an area of land 7 times the size of Singapore. Quite extraordinary. Down in southeast Australia, in the East Gippsland region of Victoria State, there was quite an extraordinary appeal from firefighting authorities yesterday. That was directed at about 30,000 holidaymakers and 40,000 residents in the region. Get out now. Fire conditions are set to be so dangerous today, with temperatures soaring to 42 degrees Celsius, high winds and the threat of lightning strikes, that they say it's simply not safe to be in the region.
Ed, we had seen a petition going around asking for Sydney to cancel their fireworks celebration for the new year. What sort of impact are we seeing on the holiday season from all of this?
That's right. A petition was signed by about 200,000 people to cancel Sydney's fireworks spectacle. They thought that the money spent on the fireworks could be better spent helping the firefighting effort. Now, the City Council has rejected that, assured people that it will be safe, and assured people also that it's such a huge revenue raiser for the local economy, with tens, if not hundreds of thousands of tourists coming into state and from overseas to watch the harbourside spectacle, that it would be insanity to cancel it. So the New Year's Eve fireworks in Sydney will be going ahead. They're being cancelled in Canberra. The smoke haze down there is simply too bad and the fire risk too high. Other festivals have been cancelled in Australia. The Falls Festival down in Lorne, that's the famous annual music festival along the Great Ocean Road down there in Victoria, has been cancelled, and about 9,000 festival goers have been told to pack up and leave the area because of the danger of fires.
All right, now it seemed in 2018 that almost every asset class, be it equities or bonds, were underperformers. The trend reversed significantly in 2019, with some of the biggest winners coming from unexpected corners. Chris Anzi of Bloomberg News tells you about the outperforming asset classes of 2019.
Most markets, most asset classes, did very well this year, thanks to central banks starting to ease policy and thanks to easing concerns about the U.S.-China trade war, particularly at the end of the year. But if you wanted to get a little alpha, do even better, then you had to go out on the risk spectrum. And in the stock market, Russia and Greece are the real standouts here. Each of these markets went up about 50% this year. So if you had put $10,000 at the start of the year, you're sitting on, almost about a $5,000 return on both of these markets. Obviously, these are particularly risky areas. Russia badly beaten up in recent years with the currency depreciating, sanctions imposed by the Trump administration, the economy not doing well, concerns about the oil market, all beating them down. But this year, we've seen enough stabilization in oil prices that the central bank there was able to cut interest rates. Economy is looking a little bit more stable, and the stock market just went gangbusters. Similarly, in Greece, we had, a transfer of power from the far left party to one of the main political parties in that country. And things look on a much more stable footing, both politically and economically. And with the central bank, the European Central Bank, also easing policy, it has done particularly well this year.
So, Chris, as we look ahead to 2020, what could do well? There's some Chinese bonds that sort of fit the hate to love category, aren't there?
That's right. So we did a separate survey of China market participants, bond market participants, and the number one pick there is local government financing vehicles. These are, again, a particularly risky area. Many of these financing vehicles lack sustainable sources of revenue to pay off their debt. They've run up, more than $1 trillion of debt over the past decade or so as local governments use these financing vehicles to fund all kinds of projects, only some of which really have any kind of income streams tied to them. But the thing is, every time that one of these local government financing vehicles gets into trouble, comes late with a bond payment, what tends to happen is the local officials will either strong arm a bank into extending a credit line, or they'll get all the bondholders together and say, look, guys, you got to extend the bond or restructure it in some way. So there hasn't actually been a default on one of these securities. since they began basically about a decade ago. So that's made the yield premium on these things particularly attractive, and investors see them as a good pick next year. And then if you look more broadly, we were talking about Russia and Greece before. Okay, so where's a market that's been beaten up this year that could potentially bounce back next year? If you look at Chile, Chilean stocks down 20% this year. They've had political unrest. They've had concerns about the economy. Remember that the APEC summit where Xi Jinping and Donald Trump were supposed to sign the trade deal late last year had to get canceled because things were so chaotic. So maybe Chile in 2020? We'll have to come back next year to see.
All right. Now, Hong Kong's financial secretary says that the economy there is set to contract in the fourth quarter as well, as the island city bears the brunt of pro-democracy protests that have now lasted for over 6 months. Rosalind Chin of Bloomberg News gets you the latest data.
Well, the Financial Secretary Paul Chan did say that in his February budget he will unveil some measures to help support businesses, also revive the economy here in Hong Kong, which has, of course, been battered these last 6 months with the protests ongoing. But, of course, there are external factors as well, with the trade war going on between China and the US, is not helping the situation either. The economy in Hong Kong has been contracting the last 2 quarters. Second and third, we saw a contraction in the economy, and it doesn't look like it's going to get any better in the fourth, with Paul Chan saying it's inevitable that the economy will continue in negative growth in the fourth quarter. Partly, of course, that's been hit by retail sales and the number of mainland tourists dropping quite heavily throughout the year. October saw some big falls, for example, in retail sales. Those are falling about 24% in that month, the most on record. In terms of visitors, those fell 43.7% in October, the biggest drop since the 2003 SARS outbreak. Mainland visitors accounting for 76% of total visitors. Those fell 46% year on year in the month of October. October, of course, usually being a peak month for retailers. The Hong Kong government has been saying, though, that the protests have dealt a severe blow to the economy, which has already been weakened by the synchronized global economic slowdown and the US-China trade tensions. We're getting trade figures out from Hong Kong later today. The October numbers showed a worse than expected fall in both exports and imports. So we're not expecting a great number again for the month of November either. The fourth quarter GDP numbers for Hong Kong will come out in February.
All right, let's see what else is making headlines across the globe. Selina Wang of Bloomberg News brings you the first word headlines.
China's top lawmaking body has approved changes to the country's securities law, easing listing rules and stiffening penalties for violations. The revisions, effective from March 1st, also specifies depository receipts as securities for the first time, in addition to stocks and corporate bonds. Vietnam is punishing 4 companies for fraudulent labels on products from China that the firms claim were made locally. Vietnamese authorities are expanding their crackdown into Chinese manufacturers who are trying to bypass U.S. tariffs. The Customs Department says it's investigating local firms that set up operations to import Chinese accessories for export to the U.S. and Europe. A 37-year-old man has been arraigned on 5 counts of attempted murder after a multiple stabbing in a New York suburb during the Jewish celebration of Hanukkah on Saturday night. The city's governor, Andrew Cuomo, described the attack as an act of domestic terrorism. President Trump urged the nation to unite against anti-Semitism after multiple incidents targeting the Jewish community in recent weeks. Wildfires in Australia are expected to get worse this week amid rising temperatures that are due to peak on New Year's Eve. More than 12 million acres of land have burned nationwide over the past few months, with 9 people killed and more than 950 homes destroyed. Australian Prime Minister Scott Morrison says volunteer firefighters are battling the bushfires in the state of New South Wales will be compensated for their efforts.
As this is a very prolonged fire season, this is putting additional demands on our firefighters in particular. And it means that the turnouts and the call-outs have been far more extensive than in previous years, going well and beyond and above what is normally expected of those who are engaged in volunteer service.
global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
All right, let's turn to India now. And Agam Vakil is here to tell you all about the day's trade and also what's happening in the futures and options space. Good morning, Agam. Seems like it's not going to be the best end. We still have tomorrow, of course, to talk about. But then looking at the global picture right now, we're looking at a bit of a cut today, but good performance on Friday.
Yes, absolutely. And also there's an aspect of, well, perhaps some amount of profit taking, Alex, that comes through as well. We have to wait and watch. We see whether or not that actually plays out. But for now, the SGX Nifty is indicating a decline of around 0.2 percentage points. So, which means that there is a likelihood that we will see a decline coming through, at least as far as the opening is concerned, but that's only a likelihood. So we did have a good day of trade last Friday, and the Nifty advanced by around 1%. We had mid-cap and the small-cap indices move in tandem with the benchmarks. Banking indices also doing reasonably well. In fact, the PSU banking index up 3%. How are the ADRs doing? And what did they do last Friday? When we did see not too much movement, and this is something which has been typical of late for the ADRs, which are listed abroad. So as you can see, we don't have too much of a movement, not more than 1.3%, either in terms of declines or advances. But how about fund flows? Absolutely nothing. And considering it was a day where turnovers were considerably low in the cash markets, we really didn't see, and that's evident in the very, very small numbers for FIIs as well as GIIs. Moving on, let's talk about your contributors. And Reliance Industries, for a change, was among those which were advancing, those stocks which are advancing, aiding the indices higher, along with something like an ICICI Bank, HDFC Limited, and Axis Bank. So watch out for some of these names as we move in. And in terms of stocks, futures and options, of course, it's a new series. And we're starting to see a little more accumulation with near 13% increase in open interest for the Nifty futures, the Nifty banking futures, looking at 28% increase in open interest. And well, in terms of your options, we are looking at 12,000 put as the one with the max OI. That will give you an idea where we are looking at resistance, or rather support, building in. And in terms of change in open interest, again, it was largely that option. 12,200 was put was the one which was the most active and saw the most addition. But in terms of the WIX, it continues to fall. It's down another 5.5% at around 10.5. Watch out for them. We do have considerably low option premiums at this point in time, quite cheap and going at quite a discount. The Nifty put call ratio at around 1.45 versus 1.3. And well, moving on, let's also consider how things are panning out with respect to stocks. So Canara Bank, PVR, MRF, all of them looking at a good up move, and along with that, an increase in open interest towards fresh longs. And in terms of unwinding, we won't have too much going in because it's still early on in a new series. We do have Tata Global Beverages, NADCO, and Tata Power in focus. All in all, Alex, even though we may see well, I would say a subdued start, you never know. We very well may see recoveries of sorts.
Thanks so much for that, Agam. All right, on to the stocks that you have to watch out for in trade today on account of them being in the news. Somit Sarkar is joining me to tell you about the stocks in news. Good morning, Somit. What's on your list today?
Good morning, Alex. I'll start off with Adani Ports. Along with this, Gateway Distriparks and Snowman Logistics will also be in focus because Adani Ports has agreed to acquire Gateway Distriparks' 40.25% stake in Snowman Logistics through its wholly owned subsidiary, that is Adani Logistics. Now, Adani Logistics will acquire nearly 6.7 crore shares of Snowman Logistics from Gateway Distriparks at 44 rupees per share, that is at a premium of 3.2% to Friday's closing, valuing the entire deal at close to 296 crore rupees. Now, as it is acquiring 40% stake, it will also have to make an open offer for 26% stake of public shareholding, and the open offer has also been done at the same price of 44 rupees per share. Now, Gateway Distriparks will be using this proceeds from this deal to repay their debt, and this acquisition for Adani Ports is very small given its large size. Now, CLSA says that the Snowman acquisition will increase Adani Ports' consolidated EBITDA by only 0.7% for FY21. Now, Now it also says that the acquisition is at an EV to EBITDA of 11.8 times, which is at a premium due to its high growth potential. And CLS also says that the funding is not a problem for Adani ports. Secondly, JSW Steel will remain in focus because the Netherlands arm has agreed to sell 39% stake in its joint venture Geo Steel to its partner Georgian Steel Group Holdings for around $23 million. Now, post the completion of the sale, JSW Steel's arm will continue to hold only 10% stake in the joint venture. GNFC would also remain in focus because they have advanced its planned shutdown by around 3 weeks by temporarily suspending the production of TDI. Now, this is done to do challenging external environment and market conditions in the TDI business. Tata Global Beverages, because they have reviewed the date of terms of joint venture with its with the Pepsi company, and it has been extended from 31st December to June 30th. CMAC, because they have signed a contract with ONGC for deployment of a vessel which has been extended till May 3rd, 2020. Sudarshan Chemical Industries, because of the bulk deal, promoter Ajay Balkrishna Arathi has sold nearly 4 lakh shares at a 0.6% stake in the company. And lastly, a new listing coming in from the primary market, that is Prince Pipes and Fittings, which will be listed on the exchanges today. Now, the base price for this IPO was 178 rupees per share, and the issue was subscribed nearly 2.2 times.
All right, thanks so much for that, Soumit. Now, the value of bank frauds, and this may not surprise you, but it is alarming, that have been reported in the first half of the current financial year, rose to a record. And that's according to the RBI's Financial Stability Report. The report cites delays in recognition as the main cause of these frauds. Advait Rao Palepu reports.
The Reserve Bank of India in its Financial Stability Report for December 2019 has noted that the value of bank frauds has been rising. As of September 2019, the total value of frauds above rupees 1 lakh that was reported by banks has touched a historical high of rupees 1.13 lakh crore compared to 71,000 crores worth of bank frauds reported in the whole of fiscal year 2019. In fact, the value of large frauds, which is above rupees 50 crores, has reached a high of rupees 1.05 lakh crore above compared to 61,000 crores in FY19. The RBI, similar to its June 2019 report, has noted that the value of frauds has been rising mainly due to delayed recognition. In fact, over 90% of the frauds reported in the first half of fiscal year 20 were actually frauds that took place in previous years. The RBI has said that it will also bring in NBFCs and cooperative banks into the central fraud database and will also review the guidelines over its early warning signals and ensure that banks strictly comply with its directions.
Now, another concern that was raised in 2019 was the effect of the collapse of certain non-banking financial companies on the banking system. Now, according to the Financial Stability Report, the RBI does not view the fall of non-bank lenders as that big a risk to the Indian banking system. Advait has more.
In its Financial Stability Report for December 2019, the Reserve Bank of India has made a very interesting note about the solvency risk posed by non-banking financial companies and housing finance companies to the wider financial system. Given that NBFCs and HFCs compose the two largest borrowers from the financial system, any risk of failure of an NBFC or HFC could lead to solvency issues and a failure of a bank or other financial entities. In its June 2019 report, the RBI noted that a failure of an NBFC or HFC could lead to a failure of a bank. But in the December 2019 report, the RBI has taken away this projection by saying that a failure of an NBFC or HFC today would not lead to a bank failure. In fact, as per the Financial Stability Report, the RBI has said that the failure of an NBFC in June 2019 would lead to a 2.7% erosion in the Tier 1 capital of the banking system, and a failure of a housing finance company could lead to a 5.8% erosion in the Tier 1 capital of the banking system. The RBI, 6 months later, in its December 2019 report, has revised its outlook and said that a failure of an NBFC would instead lead to an erosion of 2.5% of the bank's Tier 1 capital, whereas a failure of an HFC would lead to an erosion of 4.6% of the banking system's Tier 1 capital. Essentially, what this means is that the contagion risk that an NBFC or HFC failure could lead to a solvency risk to a bank or other financial entities has since reduced. This is mainly on account of NBFCs and HFCs over the last year and a half improving their borrowing strategy by moving towards longer term loans and longer term debt and away from short term paper. By shifting their borrowing strategy to longer term debt from shorter term debt, the risk of a failure of an NBFC or HFC is therefore reduced, and therefore a failure of an NBFC or HFC to the wider financial system has reduced according to the RBI's report.
All right, let's take you through some of the stories that you'll find on the website BloombergQuint.com if you were to take a look. First up, in the insolvency and bankruptcy space, the Reserve Bank of India, appointed administrator of Diwan Housing Finance Corporation, has called for a meeting of its creditors for the first time today after the mortgage lender was admitted to insolvency proceedings. Remember that DHFL is the first non-banking financial company, or indeed housing finance company, to face the corporate insolvency resolution process. India's coal imports registered an increase of 4.4% to 161.43 million tons between April and November. The government hopes that imports of the fossil fuel will be contained to 235 million tons this financial year. Indian power distribution companies have suffered losses worth 27,000 crore rupees in 2018-19, according to Union Power Minister R.K. Singh. In a bid to stem these losses, the government aims to reduce electricity transmission and distribution losses in the country to 15% from the current 18.5% within the next 2 years, according to Singh. All right, that's all you need to know going to trade today, but do stay tuned. There's lots to talk about. This is Bloomberg Quint.